Good afternoon, ladies and gentlemen. The Monetary Policy Committee met on 23rd and 24th of November 2015 against the backdrop of slowing global growth and a weakening economic environment, attributable largely to the downturn in oil prices. In attendance were 10 out of 12 members. The committee appraised the global and domestic economic and financial environment up to October 2015, as well as the economic outlook for the first half of 2016. The committee noted the moderation in global output recovery, evidenced by the less than expected growth of 2.9% in the first half of 2015. The development was pinned largely by deteriorating global trade, reversal in output growth in the advanced economies, and a significant slowdown in growth in emerging and developing economies. The key drag on growth in the advanced economies included unfavorable labor market conditions, suppressed foreign demand, and weaker than anticipated domestic aggregate demand. Consequently, growth in the United States slowed to 1.5% in the third quarter of 2015 as a result of a drawdown of inventories, deceleration in exports, drag in private consumption, government spending, and residential fixed investment. The outlook for the fourth quarter, however, remains optimistic as consumption spending is expected to drive growth supported by low inflation. The Bank of Japan continued with monetary easing through its assets purchase program with a monthly injection of 6.7 trillion Japanese yen, but this was insufficient to restart output as third quarter growth is expected to be weaker than one, thereby increasing the likelihood of dampening growth for higher stimulus. The European Central Bank (ECB) in October 2015 reaffirmed its commitment to its monthly assets purchase program of 60 billion euro until September 2016, the package for what is required for meaningful impact on growth. Similarly, the Bank of England continued its £375 billion monthly asset purchase program as the economy is expected to retreat from its performance of 0.7% in the second quarter to about 0.5% in quarter 3, with the decline in foreign demand potentially in the prospects of an interest rate hike. Growth in the emerging markets and developing economies continued to sag, reflecting the protracted slowdown in China, as well as recession in Russia and Brazil. The slowdown in the emerging market developing economies has been mainly due to weak import growth in China, low commodity prices, capital flow reversals, rising debt levels, and other geopolitical factors. In effect, the poor growth expectations could continue into the fourth quarter with the likelihood of further dampening into 2016. Overall, monetary policy in most advanced and emerging market economies appears oriented towards easing to revive output and strengthen employment. No substantial upswing is expected around the current typical global inflation, projected to remain moderate through 2016. The continuously bearish commodity prices and stronger consumer sentiments have dampened consumer prices in the advanced economies. In the emerging and developing markets, the major risks to domestic prices is mainly the increased pressure on domestic currencies. However, in most emerging markets, the low prices of oil and other commodities continue to cushion consumer inflation pressures. The domestic economic and financial development. Data from the National Bureau of Statistics (NBS) indicated that real GDP grew by 2.8% in the third quarter of 2015, compared with 2.35% in the second quarter. However, economic growth in the third quarter of 2015 was lower than the 3.96 and 6.23% in the first quarter of 2015 and the corresponding period of 2014, respectively. Both both the oil and non-oil sectors contributed to growth in the third quarter of 2015. In the non-oil sector, the key drivers of output growth were crop production, trade and communication, and information services, contributed 0.91, 0.79, and 0.4 percentage points respectively. The overall outlook for economic activity is expected to improve on account of sustained improvement in the supply of power and refined petroleum products, progress with counter-insurgency in the Northeast, and targeted interventions in the rail sector. In addition, the inauguration of the Federal Executive Council and the assumption of office of the ministers earlier this month are expected to add impetus to the growth momentum. The committee reiterates its commitment to support the various ongoing initiatives of the federal government to stimulate output growth. The committee noted with delight the slight decline in year-on-year headline inflation to 9.3% in October from 9.4% in September of 2015. The decline in headline inflation in October 2015 reflected decreases in both the core and food components. Core inflation declined for the second consecutive month to 8.7% in October, 8.9% in September, while food inflation slowed to 10.1% from 10.2% over the same period. The committee further noted the continued moderation in month-on-month inflation and reaffirmed its commitment to price stability, stressing the need for complementary supply-side policies as part of an overall strategy to lock in inflation expectations. Monetary credit and financial markets development. Broad money supply M2 contracted by 3.75% in October 2015 over the level at the end of December 2014. Annualized M2 declined by 5%, which grew in 2015. Net domestic credit grew by 10.8%, which annualizes to 14.35% in the same period. At this level, net domestic credit fell below the provisional benchmark of 29.3%. Aggregate credit reflected, which grew by 96 than the 142.8%. Moderation in credit position of the treasury. Money market reflecting fluctuations in banking system. Interbank call and 35.00% on net with liquidity 3.76% of 2015 and 18. Interbank call and OBB rates averaged 6.66 and 6.72% respectively, and were 0.41% and 1.33% on 19th November 2015. Committee also managed to equity segment of the capital market during the review period. The all-share index decreased by 9.9% from 31,217.77 on September 30th, 2015 to 2,831.28 on November 20th, 2015. Market capitalization fell by 9.9% to 14% respectively. Measures are approved at the interbank payments of the foreign 7 naira to 7 naira and 96 to the dollar, at the at 223 to the dollar, and closed at 225 naira with a average of 224.46 naira to the dollar, representing a depreciation of 1 naira. The relative stability in the foreign exchange market is attributable to the sustained foreign exchange autonomy as the effect of various administrative measures taken by the bank. Gross official increased to $9.85 billion at the end of September 2015, $30.31 on 20th of November. These considerations. The committee acknowledged the continued fragile global economic environment, including the possibility of monetary policy normalization in the United States, poor outlook for commodity prices, and further slowdown in the emerging markets and developing economies. The Monetary Policy Committee also noted the fragility of the domestic macroeconomic environment, reflected partly in low output growth, soft oil prices, low credit to the high elasticity sectors of the economy, and sustained inflationary pressures, which however softened moderately in October. The MPC was particularly concerned that the previous liquidity injections embarked upon through lowering of the cash reserve ratio (CRR) in the last MPC has not transmitted significantly to improve credit delivery to key growth and employment in sensitive sectors of the economy. Rather, credit sectors with low employment elasticity. The committee restated its commitment to evolve and implement measures that will be supportive of consolidating and strengthening of output growth with an eye on price stability. The committee, however, recognized the limits of monetary policy under conditions of huge infrastructure gap and significant complementary fiscal. Monetary policy must enable output growth, the state of unemployment in the current increased credit delivery, committed by the bank, translate employment capability. According to the Central Bank, directed at targeting culture and solid bank management to compliance, ensuring that employment and productivity is stimulated while also moderating prices. Committee noted with satisfaction the stability, soundness and resilience of the banking system even against adverse global financial conditions. Given the situation, the MPC emphasized the necessity of focusing on financial market stability and proactive engagement of policy and administrative levers needed to support. On their part, market institutions are encouraged to employ more stringent criteria in evaluating their portfolio and business decisions. The MPC considered that although headline inflation had remained at the borderline of single digits, the observed moderation, especially in the month-on-month inflation, provided some room for easing to support output in the short to medium term, while keeping in focus the primacy of price stability. In effect, committee will monitor the exchange rate, interest rates, and consumer prices, even as target measures are needed to channel liquidity to the relevant and key sectors of the economy in an attempt to drive growth. The committee noted that close coordination between the monetary and fiscal policy was imperative for sustainable growth enhancing policies. In relation of the weak economy, particularly the low output growth, rising unemployment, and the uncertainty of the global economic environment, Monetary Policy Committee, by a vote of 8 out of 10, reduced the NPR from 13 to 11%, while 2 members voted for a retention of the rate at 13%. 7 members voted to reduce the cash reserve requirement from 25% to 20%, while 3 members voted to hold positions. In addition, 8 members voted for an asymmetric corridor of plus 2% / minus 7%, while 2 voted to retain the asymmetric corridor of plus or minus 2% around the monetary policy rate. The MPC emphasized that the liquidity arising from the reduction in the CRR to 20% will only be released to the banks that are willing to channel it to employment-generating activities in the economy, such as the rail sector, the infrastructure sector, the agricultural sector, as well as the solid minerals sector of the economy. In summary, the MPC voted to 1. Reduce the CRR from 25% to 20%. 2. Reduce NPR from 13% to 11%. 3. Change the symmetric corridor of basis points around the NPR to an asymmetric corridor of +200 basis points and minus 700 basis points around the monetary policy rate. I thank you for listening.
Thank you. Distinguished ladies and gentlemen, so that was the communique presented by the governor. We should remember the House rules that we may not entertain questions that are outside the subject matters of the communique. And so, please just signify to me if you have any questions, and then take it from there. Nancy.
Thank you, Nancy, the anchor of the I would say perhaps this is coming as a surprise to the markets. The MPR motion foresee it, but listening to some of the analysts on CNBC. One, Mr. Governor, what do you think will be the effect of some of these things, some of these decisions of the MPC? That's one. Number two, I'd like you to also comment on the BVN issue with the BVCs. We've seen the wide rates, the Naira has been depreciating, there's been a free fall of the Naira, especially even at the parallel market. The BVC, we did talk about how much it was when you, but what is the central bank going to be able to narrow the rate? Because what people know mostly out there is, oh, the Naira is depreciating, it's about the parallel market. Then the third question is the 200, plus 200 to 700 basis points. What do you mean by that? Isn't it? Okay, that's
My name is Godwin Emefiele from this daily super. Mr. Governor, there is speculation that 3 banks with low CR have been asked to recapitalize. I want you to throw more light on this, sir.
Speculation that 3 banks with low CR did what?
We are asked to recapitalize by the central bank.
Governor, my name is Godwin. I want to find out. You have said that only banks that are ready to give money to the risk will be
With press.
Authorities that give money banks carry them to the letter.
Continue.
Thank you, Mr. My name is Makai. So, I just listened to you saying that you are really boosting the employment generation, and I was in last week, and some of these power discourse are complaining that they are here to assess the power fund. In fact, they are saying that it's not again on the same terms which was given out to other that have already benefited. So when are you resuming disbursement? Thank you, sir. And at what conditions? Thank you.
That question breaks the House rule outside the subject matter.
Thank you, Mr. Governor. My name is Honor God, I'm from Nigerian Pilot. My question borders on CRR. You explained that the reason why you explained that you explained that CRR. There's an explanation about the reduction in CRR. You said that the reason why the 25% that we had it before now, it was not because it was not meeting the target. It was not enough for the borrowing, to lend out money to the real sector, but they were diverting it to the sector that could not generate employment. So I want to know why you have to reduce it. Is it that because it's not enough, or you still have to reduce it to 20%? But your explanation was that the money, the 25% was still okay. And I don't know where you get my. Then the second question. My second question, sir, is I want you to assess the policy you are targeting about restricting importation of foreign goods. What's your assessment, the impact on the economy?
Thank you.
Good afternoon, my name is Business Day. Just want to find out, I don't know whether you checked the numbers, how much do you think can be released into the system immediately as a result of this meeting? One. The second thing, on the 220 MSME fund, we heard, I've raised this issue with some of the officials of the CBN, but I think I need to ask you, sir. That some of them collected some of these monies, the 2 billion that was released to them, that some of them were using it as a political tool. So rather than directing the money through the participating financial institutions, they were giving to their friends for political gains. I don't know whether CBN is aware of that, this and what you are doing.
My name is Shikiola. I just want to find out, Mr. Governor said that the liquidity in the system by easing CRR will be released.
Which press?
NCA.
Yes.
That liquidity easing, the liquidity in the system will be released to banks that will support employment or funds to build sector of the economy. I just want to know how this is possible by the CBN.
The last one.
Governor, sir, my name is Ben Brett, whom I work for Watchdog Reporters online, because I'm online publication. But just by way of information, I love to tell you that I went to some banks and I realized that banks, commercial banks, are still having problems with this issue of BVN. Is there any measure from the central bank? They are not. They didn't get their BVN, to be precise, and they have been turned back. No.
I think the governor will just take the question.
On monetary, I've observed that I think at the last end of seeing contribute employment and see whether those policies will help to moderate prices and control inflation on the economy. Basically, that is the essence of the reduction. And as I answer this, hopefully I will also answer questions related to why. At the last Monetary Policy Committee meeting, we took the decision to begin to ease, and that was why we reduced the CRR at that meeting from 31% to 25%. Unfortunately, we thought that by allowing the banks to have free access to the liquidity, that the funds be channeled to those sectors that we think will be employment-generating sectors that will support growth, stimulate development, and reduce the level of unemployment. Unfortunately, that hasn't happened. But what we decided to do at this meeting is to say, yes, we must stimulate growth. We do not have a choice in the face of the challenges facing the global economy, and Nigeria is not insulated at this time, that we must contribute to growth. As we continue to that are going to be expected, loans to the agricultural potential that will support export, so we cannot. The central bank, we're going to release we will identify which categories are real sector. That we think with improving subsistence farming, our Anchor Rural program, is it in rice, is it in tomatoes, is it in all the products will be identified, and we'll see to the fact that the banks comply to this. The banks will analyze and appraise their credit proposals just like they do currently for all other intervention programs that we have at the Central Bank of Nigeria. And as they send those proposals to us, and if we are satisfied that those proposals they send to us meet our minimum requirements, that here they fall into the real sectors and targeted sectors, we will release the naira amount that is equivalent to the cost of that project to the bank to disburse directly to those projects. That, we think, is one way we can see to the fact that, yes, because we are reducing liquidity, the liquidity will really go to support the areas that we think we need support at this time. Second, Nancy talked about the impact of BVN on the FX market. The BVN, if I can just reiterate, is the bank verification number, which is meant as a tool with which the banks can improve the level of their know your customer relationship. So it is meant for all financial transactions and is not limited to foreign exchange transactions. And for that reason, we've insisted that all financial transactions that happen in the system, that for us to be sure that those transactions can be properly tracked, to be sure there are no cases of illicit financial flows in or out of the country, that those accounts must be tagged with BVN. So selling foreign exchange to both wholesalers, in this case the banks, by wholesalers, which in this case we're talking of the banks, or those who are selling, doing retail foreign exchange sale, in this case brokerage exchange, are not exempted. So it's not about targeting any, whether it's BVN, whether it's BDCs or the banks that are targeted. But what we have observed, and I need to reiterate, is that as a result of the introduction of the use of BVN for retail sale of foreign exchange, let's not forget, foreign exchange is only meant to be sold by the bureau de change segment to people who are accessing, travelers who are accessing between 5,000 and below. And so what we're saying is, you have your BVN, you want to travel, you go to the bureau de change or you go to your bank, you can access foreign exchange upon providing your BVN number, and you can do so. In the last 3 weeks, the regulation is that those who want to make bulk purchases of foreign exchange, wholesale buyers of foreign exchange, who want to buy above 5,000 have been excluded. And so we have come to really this point where we've determined what is the effective demand for foreign exchange at the bureau de change segment of the market. And I must confess at this stage, or reveal at this stage, that we have seen substantial improvements. Most of the bureau de change operators are operating within the law. Indeed, if you go to Travelex office, which is also one of the licensed bureau de change at the international airport, we can access your dollars as you are traveling at as low as 203 naira to the dollar. So when I read, and I read newspaper reports saying that the parallel market rate is at 230 or 240, I dare say that those who are conducting foreign exchange business at those rates are those that we are not interested in, because they are those who are dealing in foreign exchange in what we call illicit transactions. If you want to buy foreign exchange today, 5,000 and below through bureau de change, I can assure you that you can access those monies at below 205 or even 210. So that is the correct situation as we speak. And the bureau de change operators are indeed complying with this regulation. Now the third question from Nancy seeks explanation about plus the 200 basis points or minus the 700 basis points as asymmetric on NPR as the asymmetric corridor. Currently, what you find is that when banks are in need of liquidity, when they come to central bank, we say that you will borrow from central bank at 200 basis points above the NPR. But if you have excess liquidity and you don't have any area to channel the liquidity, you give the liquidity to the Central Bank of Nigeria, and Central Bank pays you NPR minus 2%, which is 11%. But unfortunately, what we have found out is that rather than the banks again deploy their liquidity to the real sectors, create credit, stimulate growth, what the banks do is to just dump their money on CBN and earn 11% for, I use the word, doing nothing. So what we've decided is that yes, if you now NPR is reduced to 11%, it means if you need money, you can come to central bank and access money from CBN as your lender of last resort at 11 plus 2, which is 13%. But if you want to bring your money to central bank, you will only earn NPR minus 7%, which is 4%. Hopefully that will be a disincentive for banks to dump their monies on CBN, rather loan those monies to the real sectors or the relevant sectors of the economy. This day Also, Bina spoke about 3 banks with low capital adequacy ratio. I want to thank you for that. And indeed, this has been a subject of some topical discussions in the press. And let me seize the opportunity to confirm that there is no bank that has capital adequacy problem today. And all the news around is all false. And let me explain it this way. The central bank has its own internal mechanism with which it conducts what we call, in fact, daily stress testing of the operations and activities of banks. We stress test their balance sheet and their P&L on a regular basis using different scenarios to determine that, look, if, say, we tighten liquidity by this or losing liquidity by this, what would be the result on the bank's capital adequacy ratio or its NPL or its liquidity ratio, as the case may be. And I will hit the point at the head. What I'm saying is this. For instance, there are banks today that they are expected to have minimum capital adequacy ratio of 10%. By the time we carry out some of this stress testing, which is our own internal mechanism for determining the strength and strategic health of a bank, it may turn out that that bank, say, instead of 10, has, say, about 10.5 or 10.6 or 10.7. So what we do in that case is to hold what is called informal discussions with the bank to say, look, hey, are you aware that by stress testing your numbers under this various scenario, that your ratio may come to say about 10.5 or 10.6 rather than 10? So as to say, okay, yes, you need to begin to do something to ensure that you don't fall to the minimum expected benchmark of 10%. That's what we do as normal, and it is a responsible central bank that monitors the operation of its banks to determine the strategic health of the institutions in the banking industry, must carry out a stress testing on a daily basis. We are not about making public about what you do about stress testing banks the way it was done before. We carry it out as a practice, as an internal mechanism for monitoring and assessing the strategic health of banks. And I hope this truly puts this matter to rest. There is no bank that has capital adequacy problem. We carry out our own work, and based on that, we hold informal discussions with the bank about the level of capital adequacy ratios. That's what's involved here. Now, Vanguard talked about the CRR will only be released to banks ready to use them. I thought I've explained that. Guardian talked about, Matthias talked about Discos and Gencos. It's okay. Basically, I think you are all aware that, yes, the central bank came up with 213 billion naira as intervention facility to support the payment of legacy debts in the power sector. That program started late last year, but unfortunately we had to halt it February this year because Nigerian Electricity Regulatory Commission indeed reversed the upward review of the tariff. And of course the Discos and Gencos themselves were livid that that happened. Okay? Now, the point is that the Central Bank of Nigeria, looking at its numbers, feels that there is a need for NEC and the Nigerian Bulk Electricity Trading Company to go back and look at their numbers to come up with a cost-reflective tariff, which has been a subject of discussion all along. And I thought I also addressed that at the last Bankers Committee meeting. So once this is resolved between NEC and MBEC of the money's condition, private banks reduce further, we thought we continue to do what we're doing. The fact that we need to do it, but this we want in line with assess the policy of 41 items restricted from foreign exchange. I must confess to you that the policy is working very well. And let me repeat again that there are those companies that were importing items from outside the country before now. They have started considering shipping their machines to Nigeria so they can produce those things in Nigeria. We've had cases of, and I give you an example, there is a company that deals in aluminum cans. Canned drinks, the cans with which we store our drinks, canned Coke or canned Fanta or canned beer or canned food. Before now we were importing these companies manufacturing these drinks were importing those cans. You can imagine how light those cans are. They were being imported into the country. Whereas there's a company that produces those camps in Nigeria, but that company was not being patronized. We don't know the reason, but immediately we said that the importation of aluminum cans that they have been reserved from foreign exchange, all those companies are now buying those cans from Nigeria, from the Nigerian company. That has created jobs for that company. It has led to improving their productivity. That is what we want. We also talked about companies producing aluminum and polythene products. Before we introduced the policy, there is a company that produces that aluminum products in Nigeria. What he used to do is to go to companies importing polypropylene materials. He tells them that we have capacity to produce at the price that you want. They tell us, okay, when our stock comes down, we'll come and patronize it. But their stock never came down. But immediately we introduced this policy of restricting foreign exchange to those who are importing polythene or polypropylene materials into Nigeria, their stocks really came down. And because after their stocks came down, they now patronize the Nigerian company whose turnover has improved almost tenfold. Today that company has 2 months of orders that it has not met. That is what we want Nigerians to embrace. So, is it working? My answer is yes, it is working. Question again about 220 billion MSME fund. That is a political tool. I must say here that we don't know anything about political tool. We don't get involved in politics. We are professional bankers who do our work. But the truth is that there were a few regulations that some of these funds either were not disbursed, they were being held in banks or something before, and what the central bank did was to reverse those monies from the accounts of the banks. Once we find that the bank monies are not used for the purposes for which they were meant, we will reverse those entries from the banks. That's what we do. NTA talked about liquidity will be released. I've also explained how it will work. Deposit money banks having problems with BVN. The BVN is not meant to have stopped or to stop. If by saying that November 1 is a take-off date for the use of BVN in your account will receive credit, but your account will be limited to debits. When you go to your bank and they tell you that and you say you don't have BVN, they tell you move next to the next table, and then you will complete the processes for obtaining your BVN. Once you obtain your BVN number, you go back to the teller, you give them your number, it is entered into your system, you can now withdraw your money. We are just trying to say that the BVN will, going forward, transactions to please comply. Important information in the bank. Nigerians embrace it. We can now grow our consumer credit business. With the aim, can be paying what is called cash out. You can buy television. Your television is costing 100,000. You can deposit 5,000 with the aid of your BVN. The park and shop will grant you credit, and then you can pay in installments. That is ultimately the direction there. Thank you.